Is Chris Brecher. Can you hear me okay? Great. Just to let you know, I originally was going to go over like the best trades I've done in April and March. But I got to tell you, it's about consistency, and I'm not really good of bragging like some others do. All I know is I asked a poll in our room of what's the percentage of wins, and they said about 89%. So that's pretty good. The other thing in here, it's all about consistency. So I got on a little early because I want to tell you, if you didn't know me, I traded on the floor in the CBOE for 8 years, and I was able to afford a seat because I worked for a discount brokerage firm before that and took $200 that was a plane ticket and turned it into 25,000. So the moral of the story is not the bragging. That took 2 years. It's that the most I ever made in one day was $300. It's just I made money a lot. I made it very consistently. So the key in here definitely is consistency. And that's why I'm not going to go over like home run trades. I thought I'd show you two of the trades we did today. So the key in here is to learn how to do it correctly. So the first thing is to have 3 reasons to do a trade. And I thought I'd go over those for you because to me, I think that's more helpful than just bragging about a trade. So let's go into it so you know what I'm talking about. So number one, Microsoft. So I love having 3 reasons to do a trade. And I'll show you why we did Microsoft. So I'm going to go and take this off like this. And I'm going to take over here Meta. And over here, see the broke up. And then over here, I'm going to take Microsoft. I did it wrong. Meta on the left, Microsoft on the right. There. Now I want to show you what we're talking about in here. So what do we do? All we did in here is have 3 reasons. What were 3 reasons? Number one, that the bonds were rallying. That was number one, but it was really because Meta was going up. So I'm going to put these on 1-minute chart. So Meta has had a good couple of days. So let me give you the 3 reasons. Number one is the NASDAQ had filled the gap, and I'll show you what we're talking about. A lot of what we do is preparation. Also, keep in mind, it's not a weekend preparation. Every day changes. And that's why I get on early to go over the preparations. So number one, NASDAQ on an hourly chart. And I want to show you this so you know what we're talking about. So we're talking about the NDX, and we're talking about that. I've been publishing that for 3 days now, whether mostly in the room. I put them in the top. I call them stickies, where you put a non-trade alert up in the top left of our chat. So you have them for the other days for reference. That's your gap fill. See the gap fill? So the whole idea is if I'm going to buy something, it's going to be the NASDAQ. Doesn't mean the ES. Why not the ES? As the ES, the S&P. See, S&P hasn't filled the gap. That's why we were playing NDX stocks. So number one is the NDX. That it filled the bottom of the gap. Number two is this. I'm going to show you on a 1-minute chart. Number two is that Meta broke up while Microsoft was here. So now, don't get me wrong. We bought Microsoft here just a tiny amount to test it. We got stopped here and we got right back in. I got in more than went on the way down. Why? Because Meta was going up. I had more reasons to be in it. So number one, the NASDAQ hit the bottom of what I was looking for. Number two is Meta started rallying. Meta acted great. But the third thing, and this is sort of an art, not a science, but this is taking into account what I do on the floor when I was on the floor about open interest. So the thing in here now, there are a lot that are trying to use VWAP and all that. Use the ATR trailing stop that and use the bond market versus it and the big stocks. If you use the VWAP today, you would have gotten VWAP'd Yeah, you would have shorted. You would have gotten stopped here when it was under the ATR trailing stop the whole time. And I'll go over that's one reason we shorted the SPY earlier. But this is what I want to show you with Microsoft. Tomorrow's the third Friday of the month. You get a lot of big old open interest. So here's Microsoft, and here's the open interest in Microsoft around 410. So now when we talk about open interest, you might talk about, oh, well, it's, 1,000 here, 1,000 there. This is big. 13,000 and 41,000. That's huge. You also go on the volume. So if it was 13,000 and 41,000, yeah, and this is 50 million, it's not going to work as well. But Microsoft works pretty well. So number one, you had that Meta was going up. Number two, you had the NASDAQ was at the bottom of its channel. So number three in here is this, the open interest. So that doesn't mean it's going to stay above 410. So let's go back into them so you see what we're talking about also. So Meta broke up. So that made this more likely to break up. But I think you see a mile away where to buy it. And when it broke the flat, we were already long. So we were playing it to 410. So we played it to 410. And that's how we made 3 points. Actually, we got out of 410 and a half. We made 3 points. So the first part, we made about 50 cents. The second part, we made about $3. So that's how we made money in there. So that's how we made in Microsoft with the 3 reasons. Now, there was a fourth reason. Yeah, that ATR trailing stop I talk about right here. So you had a bull flag, you had the ATR trailing stop break to the upside on a 1 minute, and you had Meta going bonkers. So there you go. So that's why we messed around with Microsoft. Now I'll give you another one. Yeah, this was also posted in our chat. This is a classic, So on the left, we're going to take the bond market because the bond market went up yesterday, and I'm just showing you on how we did it. So all we did in here is 2 things. Number one, like I said, the NASDAQ was at the bottom of that gap. The bottom of the gap, I'll show you again. NASDAQ, that looks weird, is at the bottom of this gap, the NDX, bottom of the gap. So if that sells off, why on earth would the ES go up? And sure enough, it's going down even more. But this is the classic thing, that ATR trailing stop. So you had number one, the bond market starting to get hit. Number two, you had the NASDAQ was at the bottom of the range. So I thought the NASDAQ would lead when it started to be down for the day. That was a layup that the SPY was going to be down. That is why I posted the short right here. In fact, let me tell you where I posted it. I posted it here. Let me be sure where I posted. Well, but the thing is, it stayed under the ATR trailing stop all the way down. It's still under it. Still under it. Now, I took a quick profit of about a point because I was going to be on live. But that's what we're talking about. So you have the NASDAQ down, the bonds down, and if the NASDAQ was going to the lower rungs of support, then there's no reason the S&P shouldn't go to the lower rungs of support. And that's exactly what happened. So that's how you make money consistently. You have 3 reasons. So this one was the NASDAQ was already selling off, so the S&P should follow. And that's from Research Today. Research Today. So like I said, every day it changes. So on the left is going to be the NASDAQ again. I want to show this again. So there's your thingy I showed you right there. Right there. There's your lower rungs of support. So just keep in mind, things don't have to fill their gap. What they do, though, is if they start going down, the path of least support is the bottom of the gap. So there's one. In fact, let me see if I could share this. So I'm going to go and put this. I can't share it on the YouTube live. I wish I could, but I'm going to just go and show you this gap. There. So I'm going to go and try to show you this. There. So it was already selling off just now. Just now it was selling off. So that made me think the S&P was going to go, well, it wasn't going to go up. Let's put it that way. But before I bet on it going down, I want to see it cross something. So if you're in our room, you know I like to see things cross. So you have the correct initiation. So let me just show you this. All right, there's that. So just keep in mind, there's that. So you have that. So if the Nasdaq's at the lower rungs, why shouldn't the S&P be there? The next thing is the ATR trailing stop. So if you take this off and you just add the 1 minute ATR trailing stop, but you put it as the SPY, that's what I did. So now keep in mind that if you buy it here because it looked like it got above it, usually after a protracted down move, the first kiss above it is a false breakout. But let's just say you covered here and then it got back under it, you just reshort it. So, but the thing is, I wanted to show you this also. And just keep in mind, you see the longs and the shorts. You see the long when it got above it, and the bond market had rallied, and Meta had rallied. And then you see the short up here. So that ATR trailing stop becomes extremely important. And the more the bonds go down, and the more the QQQ goes down, the more likely this is going to stay down. So let me share this with you also. Now, keep in mind, I like to be real graphical on our side because not only am I trying to show them trades, I'm also trying to teach of what's in my head and what's going on. So actually, when the S&P was up here, I posted in there that the ES is going to be down for the day. And the reason is the NASDAQ led on the way up, but it bounced off that gap I posted. And then guess what? It started selling off, testing the bottom of the gap. And sure enough, look at that. Yeah, look at that. So the ES now going all the way to the lower rungs of despair in here. And keep in mind, there are a lot of sentiment indicators that show a lot of bearishness. But the problem is that if the thing that looked like it needed to bounce stopped bouncing, then the other indexes are going to try to go into that sort of gap rectangle. So that's how I look at it in there. So definitely it's all about consistency. If you want to buy, bullish flags are much more likely to work if it's over that ATR trailing stop and the Russell was going up. I mean, there's more than one reason. Just keep that in mind. And you had Meta go up. So you had a lot of reasons. Right here, you started to see Microsoft roll over. Just look at that right there. And that's 1128. I hope you could see that down here. 1128. I bet you Microsoft was already rolling over. Yeah, look at that. Already it started forming that. Actually, it tried to hold up here, but there you go again. It went to the 410 open interest and just kept going. See on how it's under there. So there was a time to play Microsoft on the upside right there, and there was a time to exit. Now, when I saw, and let's say you're not perfect. Let's say you sold here. Well, that's fine. You didn't get the top. I never get the bottom, never get the top. Anybody that says they get the bottom and get the top, I never have. Never have. 40 years, never done that. I try to get the direction right. So a couple of things. Number one, I like the more times you could connect trend lines, the more important. The tighter the pattern, the more important. But check out these trend lines you could draw. You need to have at least 3 points of contact. 1, 2, 3, 1, 2, 3, 4. So now you see what we're talking about, and there's no reason to buy anything at the moment. So, what's made the market go down for days? So, number one, the indicators I use, I just use ATR trailing stop and a number of moving averages. So that's it. I use the ones hedge funds use. They use a 9 or a 10 EMA, a 20 SMA, a 50 SMA, and a 200 SMA. That's it. So that's the indicators. So ATR trailing stop is just a directional indicator. Intraday, I use the ATR trailing stop a lot. If things go down fast, I use a 20 intraday. The reason is if things go up too fast, like right here, then the average true range widens. So you got to use something else. And that's why I use a 20. So when I day trade ultra short term, I use an ATR trailing stop and a 20. That's it. So longer term, if I want to determine the trend, well, guess what? Yeah, the trend is down. So I don't care what anybody's saying, but when you have a lot of indexes already violating things, and let me just tell you, if you put that over the weekend, you wouldn't have known that. Every day the conditions change. So, but on a daily chart, I'll use the 50 moving average. That will determine to me if markets are in an uptrend or downtrend. The other thing I use is the MACD, the 31016. And as you see in here, it's oversold, but things can stay oversold. So just keep that in mind in here. And Penn, how are these market calls today? So Penn is one of our loyal subscribers in the Chart Patterns Mastery. Thank you. Yeah, this has been pretty good. In fact, one of my family friends who's also a subscriber, he texted me and said, "What do you think of the markets?" This is on the open. I said, "I think you're going to see the ES up 20 or 30, and then you're going to see it try to fill the gap." So far so good. So this is day in and day out from doing analysis all day and at night to be consistent. So I just can't stress that enough. So where do we go now with markets? So I thought you'd want that instead of showing a big old trade. I can show a number of them. Like I said, we made 3 points in Microsoft and a quick point in SPY. And I'll show you another one. One of my favorite kinds of ways to trade. So one of them is the probability. So the probability of the S&P going to the lower rungs goes up dramatically if another companion index like the NDX is at the bottom of it. So that's number one. So I like looking at that. I also, no doubt, like to use trend lines and stuff. So just keep that in mind. Definitely want to use trend lines. The other thing in here, like I said, they're under their 50 moving average. But another big thing is that transports are down for the year. That's a big tell. Now on Sunday, you didn't know whether it'd break. That's why you got to do this analysis every night or have me do it for you. More times you connect the trend line, the more important. Look at that. So just keep that in mind. Now, another thing, similar charts have similar patterns. So let me show you in the same group. Well, you see similar charts are having similar patterns, but this is how we made good money yesterday in the semiconductor, the SMH. This is pretty cool, and it worked great. So SMH. There. Now I'm going to show you on how I did a financial trade instead of just detaching myself. So similar charts have similar patterns. So we're going to go to a 4-hour, and you're going to see that ASML had lousy earnings and it broke. Then you're going to see the semiconductor index have a very similar pattern. And yep, we shorted right here, right there. Now, you might say, well, why didn't you stay in? Well, I'll show you why. So the thing about the semiconductor index You can't really tell on here, but the point was is that I got out too early. Got out too early. So this is a little sloppy, but basically what happened yesterday is we shorted right here. I just want to show yesterday, not today. That's why this is all screwy. So you see this break and you see the break of the ATR trailing stop. Guess what? Yeah, that's where we shorted. Whoa, look at that ES go. Wow, pretty cool. Look at the ES get trashed. Yeah, I don't know who told you that was going to happen. Yeah, the ES going to the bottom of the gap. Really, the bottom is about 49.90. You're at 5,009. Yeah, you're close, but there's no way I'm buying the S&P till the two factors that made the markets go down turn. I have to see the bond market have a sharp rally, or I have to see the NASDAQ have a sharp rally, or see this have an air hold to the bottom of the gap. So that's what I'm watching. But getting back to the Van Eck semiconductor yesterday. So we got short here. Now we covered here. Should I have covered here? No. Now I know that's hindsight, but the point is, in usually money management, let's say I shorted 100 shares here, like I did. Let's just say I shorted 100 shares. You cover 50 in this area just for a financial consideration because you're up 4 points, 3 or 4 points. But the rest, you try to ride it all the way to the cross of the ATR trailing stop. And as you see, that would have been an extra 3 points. A lot of times in my 43 years, I make more on the half than I make on the original amount. So that's pretty cool. So then you're like, well, it's still in a downtrend. So let's take ASM out. As you see, the stock looks bad today too. So what's the moral of the story? If you see the SMH start to cross the ATR trailing stop when the ASML has broken the pattern, that's where you short it. Right there, 211.02. Now, that might not be a home run, but it's a quick $2.50. So, I mean, that's the way we try to trade, and we do that all the time. So, just keep that in mind. So that's the way I look at it. So in there. So that's the way I look at this, and just want to let you know. So now keep in mind, yeah, metals is sort of where it's at for now. But just keep in mind that so much is geopolitically driven, and the GDX that should move with the metals is instead not moving. This is all about geopolitical. If it comes out of a non-event, you'll probably see gold fit down $50 in one day. Because this usually the stocks lead the metal. Obviously, they're not right here. So just that's the way I look at it. So, in here. The other thing, I go over with my wife all the time about, hey, you could see this a mile away. And she's like, no, I can't see that a mile away. But when you see this bull flag right here, you can see that a mile away. And she's like, yeah, I see what you're talking about. If you got out here, well, too bad. You still made 3 points. So you got out too early. Like I said, the first breakdown after a protracted move in that direction is usually fake. But look at how many times you could draw a trend line. So if I got out here, well, I got out on the first break. So that's, but it worked. So just keep in mind that worked. So, so now where do you go? Well, number one, you still got to respect this. Now the NASDAQ's at the bottom of that level, right here, right where it was on February 21st, right in there. So where would that put the SPX? They don't always move together, but they have, for a long time. Remember the NASDAQ has actually led the SPX, but I'll show you as fast as I can. So there's that, February 21st. The S&P, February 21st was here. Yeah, that's why I mentioned that 49.90 area. So if the NASDAQ overshoots, I think the S&P is going to overshoot. Now, go into a 4-hour chart. You're going to see the S&P, you see that gap now. You see that gap area. So just keep that in mind, that area. And also keep in mind this area. Yeah, so believe it or not, this blue line right here is where the transports are. The transports are where they were the end of November. Now, I'm not saying the Dow Jones transports, the Dow theory works perfect, but I'll show you when it does. So a lot of pundits talk about the transports versus the S&P, and that if one goes down, the other should go down. Well, that hasn't worked for a long time, and I'll show you why. And when it does matter. So on the left, I'm going to put the transports. I'm going to put it on a daily chart. As you see, this is where it was the end of November. Now, you might say, well, it's twerked to the downside a lot, but the NASDAQ has gone up, so it didn't work. Yeah, but take the bond market as well. And unfortunately, one of my monitors is messing up, so sorry about that. There we go. So when you combine the negative divergence of the bonds, that's bonds down here, with the negative divergence of the transports, then it's more likely that's going to work. And you're combining it with a trend line break. Everybody trying to anticipate when the NASDAQ's going to break when it didn't have any definable trend line to break. You got to wait for that definable trend line. So if you zoom in, you had a number of them in here. You had that, and there you go. So then the transports matter because now you sort of have an objective now that that momentum is stopped of where it could go. And theoretically, it could go back to unchanged for the year. So that's where I am at the moment. So in here, you see right here, daily or 1 minute, it's in here. So daily or 1 minute, I'm showing multiple different time frames. Just keep in mind, intraday, I use a 20 and I use an ATR trailing stop. I don't use the VWAP that much. You can, but I'm telling you right now, how would you have used it right here? Yeah, it fakes you out a lot. But yeah, you could use it intraday. A lot of institutions use that. The only thing to realize with that black line, the volume weighted average price, I'm not using an anchored. I'm just using what most of the institutions use. If you short it on here, well, if the bond market's going down, you're probably going to stay short. Right here, it kissed it, but it still didn't decisively get above it. So, yeah, here we go. Give me a second. It changed the screen. That's what happens when the computer blanks out on you. There, and thank you for posting that. Yeah, thank you. So let me see if I can get that on the other one. Well, I can in the YouTube live. I don't know why it's not working. So let me see if I can drag this. I can't get it to work, unfortunately. And I'm going to have to go in a minute. But all I can tell you in here is the VWAP does work, but intraday, I use the ATR trailing stop a lot more. So I use a lot more. So I just want to let you know that. Let me see if I could drag this over. All right. I hope you can see it now. So I don't know why this happened, but it's probably hackers. So I hope you could see that in there. So I use the ATR trailing stop a lot more, but combine that with the bonds, the NASDAQ, and the ES right in here. And definitely overnight, look at the big indexes, the transports, the Russell, and so on. Now, we were talking about the more times you could connect the trend lines. This was one I actually posted on StockTwits, and the head of StockTwits reposted, which is nice of them. There you go. Remember this? Yeah, the more times you could connect a line, the more important. That's why I was bearish right here. There. That's good for about 150 points. But I'm telling you, I know most of the time markets go up, but there's a time and a place to play it on the downside, and you see those kind of trend lines. So just keep that in mind. So like I said, I'm in the chart patterns mastery. I know it's sort of obscure advertising wise, but that's where I am. So ATR trailing stop, I'm using 9 and 2.9. Let me see if I can show you. In fact, let me see if I can do a screenshot for you. I have one, I just don't know where it is. So give me a second, I'll try to share that with you. I got to find it. Let me know if this works, but that's what I use. So right there. So just keep that in mind. Thanks for being with me, and I will talk to you later. Hope you found this enlightening. And Chart Patterns Mastery, I'll be back in monitoring all day.